Welcome back to the channel. Today I'll be covering on Palantir, one of my top 5 conviction stocks. Please note that this is not an investment advice. The video is purely for educational purpose only. I do own Palantir and may be biased in my view. Always do your own due diligence, please. There are 3 key takeaways from the recent quarter 4 earnings. I think Palantir has reached an inflection point when either they are primed to go exponentially or they will fail to execute nor deliver on expectations. So it's critical that we track these 3 aspects closely. Also, there were lots of news on Edu-vestor selling off Palantir on the grounds of slowdown in government business growth. I will address this issue next. The management has guided for a long-term growth of 30% on its top line. It may be concerning to see growth rates declining from 40s to 50s to just 34% in Q4. In other words, the growth rates are actually closing in on the long-term target of 30%, which makes one wonder if the target is actually sustainable. So one primary slowdown in growth was actually attributed to the government business. The year-on-year growth was at a high of 76% in Q1 and that collapsed to actually 26% in Q4. In addition, there's no new client added for the year as well. So one of the popular bear case is that Palantir is a government contractor and there's only so much contracts you can secure out there. If you do hold this thought, I would like to share some numbers with you. Palantir previously quantified the government total addressable market to be 63 billion, and that is made up of 26 billion from US and 37 billion from other governments. If you are a nerd like me who like details, they basically took the total government spending figures from IMF and assumed 5% spending on software. They further applied a discount to carve out the areas that Palantir serves for the government business. The end number is a TAM of 63 billion. As of December 2021, the total remaining due value for government contract of Palantir was at 1.2 billion. This means Palantir has only penetrated a mere 2% of the whole government market and there's a long runway to go. For those who have not heard of the term total remaining deal value, it actually means the backlog of the contracts that have already been secured by Palantir but not recognized as revenue yet. In other words, if Palantir stop all sales activity today, they can still live on this 1.2 billion of sales for the next 3+ years. The main point here is that Palantir is far from hitting the ceiling in terms of its total addressable market. Like Palantir mentioned in their annual report, the real concern here is if there is a cut or delay in government budgets. Both the accompanying remarks and earnings call alluded to the issue of a budget delay. Alex Karp was asked by analysts on the decline in government business growth. He mentioned that the government side will continue to do 30% on a long-term basis, but it will be lumpy and will fluctuate across time. There is no slowdown in growth. Another interesting point to note is that he mentioned the contracts Palantir has been gunning for have actually been closed. He went on to say that the dangerous world out there continues to require the service of Palantir. If you are to put these two information together, we can guess that the decline in Q4 growth is due to a delay in budget. We have to look out for Q1 results to see if the numbers have been pushed back from Q4 2021 to Q1 2022. While the government side has a long runway, commercial growth holds much more potential and this will be the main thesis of my investment. I'm glad to hear that the plan is to massively ramp up the commercial side and we are actually seeing early results with an increase in growth rates from 19% in Q1 to 47% in Q4. This was achieved with a huge hiring of sales staff from 12 to 80 in 2021 for US commercial. We should note that most of the hiring actually took place near the end of 2021 and Palantir was still able to achieve such good growth rates. I want to see much more, or rather a higher growth next year in US commercial after the new sales force settle down and begin to contribute. And that's not all. Palantir will continue to scale up commercial in the European regions, followed by the rest of the world. The main takeaway here is that there's a plan in place. We can see green shoots and am excited on the growth runway of its commercial business. Ability to scale. While we are excited on the commercial growth, the ability to scale is a key ingredient for success. We know that Palantir excelled in serving huge Fortune 500 companies. For example, Skywise was built for Airbus not just as one of the many softwares, but it acts as the operating system of the Airbus ecosystem. Any parties who interface with Airbus has to use Palantir, be it suppliers, third-party contractors, or airlines. The numbers you see on screen demonstrate how deeply entrenched Palantir Foundry is in the whole airline industry, not just merely for a few companies. Also, Palantir software was critical in the COVID fight for NHS in terms of distributing PPE and vaccines. While it cost a 25 million price tag, it provided more value compared to another system built for a much simpler task. The takeaway is Palantir provides huge value that justifies a high price tag for use at industry level as well as large corporates. But in order for Palantir to grow beyond a trillion market cap, it must be able to serve markets down to SME or even consumers. If you have a look at the top 20 companies by market cap on the S&P 500, all of them have consumer-facing business, as the TAM is simply much bigger than just serving large enterprises. On this front, I'm glad to hear Alex Karp addressing the issue. He mentioned the pushbacks from companies IT department of being risk adverse to trying out a software of high price tag, even if they believe in Palantir can deliver value beyond all of the existing softwares they had. They will be questioned by the bosses why they had those existing softwares in the first place. If I am to use an analogy, Palantir provides a toolbox that not only solves issues you think you have today, but also come in handy for other existing or even further problems you have down the road. But sometimes people just want a wrench and don't want to buy the whole toolbox. What's of importance is to solve the issue at hand with that one wrench. It's a turning point now to see Karp admitting that they are open to modularizing Palantir into bite size. This essentially means pulling out specific parts of the software and selling them separately to serve a specific needs for companies in a particular industry without having to buy the whole Foundry software. Two great examples are Foundry for crypto and Foundry for beverage. This will solve the security issue and pricing/supply chain issue of these two respective sectors. Stock-based compensation and route to profitability. We often hear complaints of high stock-based compensation diluting shareholder value. Karp addresses upfront that the SBC will normalize. You can see a decline in the number of new share issuance in recent quarters by referring to the annual report. But what's more shocking are the numbers you see below. The top numbers are operating margins adjusted for SBC. That's what management has been showing us, that is around 30% level. Many critics will point out that these are adjusted figures, which are actually artificial numbers. For the first time, we have actually access to the margins at GAAP basis, which means all expenses are accounted for based on the general accounting principles. You can see the rapid decline in loss towards profitability. This correlates to what Karp says about having to normalize SBC in order to be GAAP profitable. This is because Palantir is built for crisis times, and that calls for strong financials, and being profitable is one of the factors. This should allay the fears that Palantir will continue to be unprofitable and having high dilution to shareholder value. To sum up, we know that government growth has declined and is possibly due to budget delays. Hopefully, we can see some good numbers in Q1. For commercial, we have seen green shoots shooting out and rapid hiring taking place to execute the growth plans. In order to deliver commercial growth, Foundry has to be able to not just capture enterprises, but also go down market to serve the small medium businesses. Modularizing is key to the ability to scale. Lastly, to address the elephant in the room, Karp expects SBC to normalize and to be GAAP profitable in about 2 years time frame. That's all for my sharing. These are the 3 main key points from the earnings call and Q4 results. Do read through the materials provided by Palantir yourself, as there are many important data points in there. Thanks for listening. See you in the next video.